So let me ask you this: as far as this is a business show, so a lot of people that listen to Earn Your Leisure are entrepreneurs or aspiring entrepreneurs. One of the hardest things for entrepreneurs, business people, 1099 contractors, things of that nature, is to buy a home, because it's like a lot of times one of the benefits of being a business owner is that you get to write off a lot.
Absolutely.
But the problem with that when it comes to getting a mortgage is that you don't show enough income. So now it's like, you're in a tough spot because, yeah, you might have made $200,000, but you only paying taxes on $20,000.
God bless America.
Things like that.
Or $750.
Yeah, on 180 million.
yeah. 750 on 180.
750.
Beautiful world we live in.
So, but yeah, it's like it's hard to get a mortgage. But you was actually enlightening me. Like, there's different programs for business owners, like especially like bank statement loans, things of that nature.
Absolutely.
So, because we haven't really covered that. Can you talk about that?
Yeah, so you have loans out there that fall into that non-QM category, non-qualified mortgage. It basically means Fannie Mae or Freddie Mac, who buys conventional loans from banks, right? They won't purchase this type of loan. But there's private lenders out there that will fund bank statement loans, whereas you can put as little as 10% down. You can borrow up to $4 million with this type of loan, and we're using the deposits as your income for your business. So you can use either 12 months or 24 months of those deposits in your business bank account, and that can be used to qualify you for your loan. So there's no tax returns, there's no W-2s, obviously, because you're self-employed. Right. We're not looking at any of that stuff. We just need to see 12 months of your business bank statements, and we use that for your income to qualify. And you can put down as little as 10% with these loans.
How's the interest rates?
Oh yeah, the rich interest rates, you're gonna pay for it. Like you're gonna pay for it. Like you're gonna talk probably like in right now 6 to 8% range, depending on the lender. You know what I'm saying? And when you talking 6, you're probably gonna have to be more 30%, 35% down. High credit. Minimum credit score for this program is 660. But you want to get that lower rate, you're gonna have to probably be in the high 7s. With a larger down payment. But if you're talking 10% down, jumbo bank statement loan, you're probably going to get clobbered for like 7.5%.
Can you refinance later?
Absolutely. You can always refinance, right? And here's another gem. If you use the bank statement program and you get into, let's just say your rate is 7%, right? File your taxes, and your business has been in business for 5 years, like legally in business, right? Like you have your filing receipt in this document. Freddie Mac has a program where you can use 1 year tax returns as a business owner, right? So now this is a conventional loan. So you can refinance into the conventional loan. Just file your taxes the right way. Show the income now. Pay the tax man what you owe them, or get into a payment arrangement so that way you have a monthly payment on your tax bill that's outstanding. We include that tax payment into your debt to income ratio, and now you can use 1 year of your tax returns, and those negative tax returns, we don't even have to look at it. So you can just use the 1 year and then refinance into a conventional loan after you do the bank statement loan.
How long you have to stay in the property?
If you're doing a primary residence, it's 1 year occupancy, but obviously bank statement loans is not just for primary residence. You can do vacation homes with it. You can do investment properties with it as well.
But that's big, especially for business owners, because if you compare it to like a hard money is like 10%.
Yeah, hard money right now, COVID rates are probably going to be 10 to 13, 14%, depending on who you're working with. And it's only in your LLC's name. So these bank statement loans, just to clarify, is in your personal name still. It's not in your LLC's name. So when you go asset-based or hard money, that's strictly in your LLC's name. And that's why the rate is even higher, because it's all LLC-based.
But that's extremely valuable. And even if it's 6% or even 8%, it's still depending on how much income you're not showing, because you got to realize it's a trade-off, right? You either show a bunch of income. By showing a bunch of income, you have to pay taxes on that money.
Correct.
So like, let's say you're making $200,000 and you're showing $20,000. In order to qualify, you need to show $100,000. So now you got to show $80,000 more.
Correct.
So now you could potentially be paying $30,000 more in taxes. So even if you're paying twice as much or even 3 times as much on the interest rate, it might not equal that, at least up front. And then you always have the opportunity, even if you're paying a higher amount, to refinance down the line.
Absolutely.
You always have the opportunity to sell the property.
Absolutely.
You always have the opportunity, if it's a multifamily home, to generate income to kind of
Absolutely.
offset that. So that's something that business owners should definitely be aware of, because like I said, that's a decision that business owners have to make all the time. Like, all right, do I sacrifice? Do I show more income and pay more taxes? Or do I just rent an apartment forever because I don't have enough money to just buy a home in cash? It's something that, you know, if you don't own a business, it's not a big deal. But not just business owners, but also, like I said, 1099.
Absolutely.
Contractors.
Independent contractors are considered self-employed in the mortgage world, because you're not having any taxes taken out of your checks. So you're self-employed. So you're filing a Schedule C, right? And you have to pay taxes. So it's the same thing, you know. But if you're 1099, you're gonna have to. I would probably set yourself up as a business, so that way you can get better tax benefits of having yourself incorporated or a LLC versus just having yourself as Schedule C filing. But, you know, like you said, pick your poison, right? You want to pay $750, like, you know,
optional,
or you want to go buy real estate. So you're going to have to pick what's your poison right now. So if you want to have, this program gives you the option of having your cake and eating it too, paying less taxes, using the deposits to qualify, and you still buying real estate. You're just going to have to pay a premium for it. So for me, I think the program is amazing, and it helps so many entrepreneurs get into the real estate business.
Yeah, get you a good CPA.
Yeah, get you a great,
get you a great CPA.
Get you a great CPA.
That's a fact. So you had a question, Troy? Or?
No, I wanted to go into one of the things that you mentioned before, and that's the appraisal process.
Okay.
Because obviously I've spoke about this a number of times of how my family was robbed of thousands of dollars during the appraisal process. And one of the things, in speaking to you, what I came to find out was something called the AMC. Can you explain what that is?
So AMC stands for Appraisal Management Company. So when the market crashed, the government said it was the bank's fault and the appraisers. So they took the control away from the banks and the brokers, the mortgage brokers. They took the appraisal control away from us, that process away from us, right? Mm-hmm. We can't have direct contact with an appraiser. So when we do a deal, we go through the appraisal management company. The appraisal management company now picks from a round robin of appraisers that's approved with whatever lender they're working with. Mm-hmm. And then they're the ones who have the communication with the appraiser. They set up the order with them. You got to contact this person, whatever, right?
In my mind, I'm thinking the government did this because it was like, if I was an appraiser, mm-hmm. I know you worked at the bank, you telling me like, yo, just give them a good rate so we can make money on the deals. Is that why?
It was kind of like this. Right? Let me tell you how it went.
Let me tell you the story.
Let me tell you how it went in the wild cowboy days. It would say, yo, Giovanni, I need this deal to go to $800,000. I know it's probably only worth $7,000, but what can you do? We can pay you extra. And Giovanni will come back with an appraisal report of $800,000. And there was no systems in place back then and no technology like we have now, where underwriters were really vetting that appraisal. They would just close on it, mm-hmm. right? They would take their word. So the market was being inflated. And what they're saying is true. You know, let's call a spade a spade. We had too much contact, right? If you're an appraiser and you know I'm sending you a lot of business, look, if I need you to make this happen, make it happen. And they would, because there was really no regulation behind it. Mm-hmm. Now with the appraisal management company, that's out of the window. You can't even talk to the appraiser. It's illegal for us loan officers to talk to appraisers now. So I don't know who the hell the appraiser is going to be on the deal until I get the actual report. And even when I get the report, I can't make contact with them. If I want to dispute something, I have questions, I think there's errors, it all has to funnel back through the AMC. Mm-hmm. And then the AMC goes back to that appraiser to make whatever corrections.
My graduates from my school being Forbes, bag drop.
Bag drop.
A mic drop, bag drop.
Bag drop.